Okay, I just wanted to talk a little bit about Schedule A. We have some ceiling and floor calculations when we do our Schedule A, and this is a source of confusion at times, so I wanted to just give you a little bit of detail, go through a problem with you. So, with our Schedule A, when we're talking about Schedule A, we're talking about itemized deductions. So you have to be over the standard deduction to even want to consider all of this, but we have to compare to see what are we allowed on our Schedule A itemized deductions. So we have ceiling and floor calculations we have to look at. So an example of a floor calculation is going to be medical expenses. Medical expenses have to be above a certain amount before you can even deduct them, and that's a floor calculation. So in 2018, it is 7.5 of your AGI. That changes annually, but for 2018, it's 7.5 of your AGI. So what the IRS is doing with medical expenses is it's not rewarding you for having medical expenses as a deduction because they're giving you this floor calculation. They're saying only in years of catastrophic medical expenses will you be able to get a deduction. That's why there's a floor calculation, because average medical expenses are not 7.5 of AGI. They're below that. So if you have over 7.5 medical expenses of your AGI, then that's saying something catastrophic happened that year, and the IRS says we will give you a tax break because you obviously had some unforeseen expenses. So that's a floor calculation. An example of a ceiling calculation is charitable contributions. Charitable contributions, the ceiling is 50% of your AGI for cash. We'll talk about some of those other limitations, but let's just go with cash, 50% of your AGI. So the IRS is saying in that circumstance, there's a ceiling. So you, from 0 all the way up to 50% of your AGI, you're going to get a tax deduction for that. They are encouraging that type of behavior. But at 50% of your AGI, if you're going to be giving away that much, you don't really need the tax break for that. And so they're going to say that's as far as a deduction as you're going to get. A couple other Schedule A limitations you need to be aware of are gambling losses. You are able to deduct gambling losses, but only up to your gambling winnings. So the IRS is saying, yes, you can deduct the losses, but not to be more losses than winnings. So only up to your winnings are you able to deduct. You pull your winnings, you have to report your winnings in your AGI, so your income has to pull that into the gambling winnings, and then your gambling losses are only up to those gambling winnings. And then lastly, taxes. So the property taxes and personal property taxes were limited to $10,000. That's all. That's a new limitation, so we're only able to take $10,000 no matter what property taxes that you expended in 2018. Okay, so these are some of the limitations we need to be aware of. So let's go through a problem. We have Ringo. His AGI is $50,000, and included in that $50,000 is $25,000 of gambling winnings. Okay, this is his activity. We have medical expenses of $1,500. We have gambling losses of $2,000. Charitable contributions, he had $300 in cash, $100 in furniture, and then we have property taxes of $16,000. So the question I'm going to ask you on an exam is, how much itemized deductions is he allowed? Because remember, you have to compare itemized deduction to the standard deduction, so whichever is higher. So we need to make sure that we get this right. So, with those are the facts, what's allowed here? So, medical expenses of $1,500, how much can he deduct? We need to come over here and do our floor calculation. So his AGI was $50,000. Multiply that 7.5%, and we are going to get $3,750. So if he had $1,500, how much is he able to deduct? None, because he did not get above this floor. Okay, so if he had $3,000, he still not. If he had $4,000, now we're able to deduct something, but at $1,500, we're not able to deduct any medical expenses. Okay, so we have gambling losses. $2,000. How much winnings did he have? Well, we've got plenty, so we're able to take $2,000 of gambling losses. Okay, so then we're going to look at charitable contributions. We have the ceiling calculation of 50% of AGI. So if I'm looking at his AGI is 50,000 times 50%. Okay, we're at 25,000. He's able to deduct up to that. So what does he have? We have $300 cash, so he is able to take the $300 cash, and the furniture, $100. He's able to take both of those because we're well under that one. Okay, then we have property taxes, $16,000. We're limited to $10,000. So even though he has 16,000, we're only able to take $10,000. So if I add all of this up, we are at 12,400. So you need to be able to do these calculations in your head. When I give you the medical expenses, you need to be able to memorize what the floor calculations are, what the ceiling calculations are, what the limits are, in order to come up with the proper amount of Schedule A deductions.